The stock market just took a nosedive because the Federal Reserve Bank just admitted that inflation is apparently still a problem, and you should ignore everything that Trump says and expect less interest rate cuts in 2025 because apparently inflation is still a problem. This is what Jerome Powell, who is the chairman at the Federal Reserve Bank, said, quote, "The slower pace of interest rate cuts for next year, 2025, really reflects both the higher inflation readings that we had this year in 2024 and the expectation that inflation will be higher next year in 2025. Now, this is interesting because it feels like every single commenter on YouTube already knew that inflation is still a problem, but the Federal Reserve Bank just realized it for themselves. Now, this news obviously was a little bit of a shock to Wall Street, and stocks fell. The Dow Jones fell by more than 1,100 points. The S&P 500 fell by almost 3%, and the NASDAQ fell by around 3.5%. And so this is where I want to go over three things in this video. Number one, I want to talk about what the Federal Reserve Bank said and their decision to cut interest rates this year and next year. Number two, I want to talk about where inflation is right now and where it might be going. And number three, I want to talk about this new butting of heads between Trump and the Federal Reserve Bank. So let's jump right in. But first, a quick reminder, 2025 is going to be an interesting year for the economy. And that's why on January 7th, 2025, I'm hosting a free live and virtual workshop on how you can build and accelerate your wealth in 2025. More specifically, I'm going to be going over three things. Number one, how do you create an investing strategy for you? That way you always have money to invest. Number two, how do you find unique investment opportunities in this changing economy? Because we're seeing a lot of changes with the Federal Reserve Bank changing the monetary policy, with President-elect Trump entering the White House and his new economic policies. And then number three, how do you actually research these investment opportunities? So it's a completely free workshop, but you do have to register. I have two times on January 7th, one in the morning at 10:30 a.m. Eastern Standard Time, and a second in the evening at 8 p.m. Eastern Standard Time. So if you'd like to join for this free workshop, all you have to do is register and save your seat by clicking the link down in the description below. Now let's jump into the Federal Reserve Bank decision, because the Fed said two things. Number one, the Federal Reserve Bank cut interest rates by 0.25%, which was expected. And then they said you should expect less interest rate cuts in 2025. More specifically, they said you should probably expect only 2 interest rate cuts in 2025 instead of the multiple interest rate cuts that we had kind of been hinting and hoping for, and what Trump has been saying, because we all know that President-elect Trump has also been hoping and talking about a lot of interest rate cuts in 2025. The reason why Jerome Powell is saying this is because number one, inflation still seems to be a problem, which they just realized. And number two, the economy looks just fine on paper. This obviously was a little bit of a shock to Wall Street, because Wall Street has been hoping that the Fed would be more aggressive with cutting interest rates, because that would make markets grow hopefully faster. It would make borrowing money easier, to stimulate spending, to stimulate debt. But this is where Jerome Powell says maybe this might not be a good idea. And we also saw the bond market rise, bond yields rise. The 10-year yield jumped up to around 4.5%. What does that mean? Well, this impacts mortgage rates. If you've been thinking about getting a mortgage, higher treasury yields generally mean higher mortgage rates. So keep an eye on the 10-year treasury yield if you're thinking about buying a house, because if the 10-year treasury yield is rising, that also means that the mortgage rate that your bank is going to charge you is also going to be going up. So keep your eyes on that. This brings me to topic number 2 for the video, which is what's going on with inflation. And let's go over just the last 3 months as to where inflation has been. 3 months ago, we got the data that CPI, or inflation, was at 2.4%. 2 months ago, we got the data that inflation went up, not down, to 2.6%. And then we got the data that inflation jumped up to 2.7%. So the last 3 months of inflation readings went from 2.4% to 2.6% to 2.7%, which means inflation has been going up, not down. And this is why the Federal Reserve Bank says, maybe we didn't solve the inflation problem like we thought we did. Maybe we need to take it a little bit easy on stimulating markets, on stimulating spending through cutting interest rates. Maybe inflation might be higher in 2025. That's what they said in their most recent meeting. And this is what many people have been talking about, which is my income is not keeping up with the price growth of things. Things are still very expensive. Inflation is still a problem. But the interesting part about this is that on one hand, the Federal Reserve Bank says inflation is still a problem. We want to be less aggressive with interest rate cuts in the future. But why are we waiting until the future to start fixing the problem? And by quote unquote fixing the problem, they just want to do less stimulus. Because normally when you cut interest rates, it's a way to create inflation. It's a way to create spending. It's a way to create more debt. Because when you cut interest rates, it's cheaper for people to go out and borrow money, which means more money ultimately gets created. So if inflation is still a problem, why do we want to wait until 2025 to start thinking about it? Why do we want to wait until 2025 to start cutting the rate at which we're cutting interest rates? Which is kind of an interesting dilemma, but here we are that Jerome Powell is saying at the Federal Reserve Bank that we're going to wait until 2025 to start fixing this problem, and the way we're going to fix it is by doing less stimulus in 2025, and we're not going to do what President-elect Trump says. Which brings me ultimately to probably the most interesting and entertainment part of this video, which is what's going on between the Trump and Jerome Powell, or Federal Reserve Bank, butting of heads. Because this was a common question that Jerome Powell got in his meeting. And what Jerome Powell said is, quote, "We expect significant policy changes after Trump enters the White House." And what he said about that is, we need to see what they are and what effects they have. We'll have a much clearer picture once Trump actually enters the White House. So he kind of dodged all the questions about what he's going to do about it, because what Jerome Powell essentially said is, we don't know what Trump is going to do. We don't know the exact impacts of things like tariffs, his tax cuts, and all the other economic policies that he has, but he's going to keep an eye on them and then adjust his interest rate schedule based off of what Trump does, and he is not going to change his policy decisions based off of what Trump says. The concern that a lot of people have is that when Trump imposes these tariffs, that they could make the inflation problem worse. And if the tariffs make the inflation problem worse, well, that's going to create a harder fight for the Federal Reserve Bank. That's one part of it. The second part of it is, what are the tax cuts going to do by Trump? The third part of it is, what's going to happen with the economy? Because remember, you cut interest rates generally to stimulate an economy. And Trump has been talking about a lot of policies to boost the American economy, which is a good thing. But if the American economy is being boosted, why do you need to cut interest rates? And this is where a lot of people have questions as to what's really going to happen. And this is what Jerome Powell is saying, that we don't know what's going to happen. We're going to change our decisions based off of what we see in the data. And this is where he goes on to say, quote, "It puts us in position when we finally do see what the actual policies are," meaning the actual policies that get passed by Trump, "to make a more careful, thoughtful assessment of what might be the appropriate policy path." So Jerome Powell is saying, we will ultimately decide what will happen when we see what Trump does. Now, I want to remind you that I have a video coming soon on tariffs and how they've impacted the economy in the past based off of what we've seen in history. So keep an eye out for that if you're unsure about how tariffs actually work and how they could impact the economy today. But what does this mean for you? Because I made a video not that long ago talking about how markets have been going up and up and up despite any bad news that we've gotten. And now, here we are, and we got this news that the Federal Reserve Bank might not stimulate the economy as much, and markets finally fell, which is kind of what I was hinting at, which is nothing can go straight up forever, and you want to be prepared for anything. So what does this mean? Well, remember, if you are just investing your money into the markets, ABB, always be buying. So if you are a passive investor, you're investing your money into the S&P 500 or into the total stock market or into some other broad index, all you keep doing is buying. This creates a better buying opportunity because you can buy more of your fund at a discounted price. Because remember, you're investing for the long term. We know that markets go up and markets go down, and we have seen markets go up and up and up and up for the last number of years with really no breaks. Now, of course, we don't know what's going to happen today or tomorrow or next week, but this is where, again, markets will go up, markets will go down. They create investment opportunities when markets go down, assuming you're investing in a long-term investment like that. If you are more of an active investor, you're looking for individual companies, don't turn into a trader as soon as you start to see some bad days. Analyze, research, find the opportunities. Because remember, the goal is to buy at a good price. And if you find a good investment and markets are going down, That creates a good buying opportunity. Now remember, for 2024, markets have gone up quite a bit. We've seen the stock market rise by around 30% in 2024 alone. So a little bit of a pullback really isn't that surprising. But this is where I want to remind you, because anytime we start to see any of these big one-day drops, people start to panic, people start to freak out, people start to wonder if the stock market is actually a good investment. But remember, if you are investing for the long term, be a long-term investor. Don't change your mindset and become a trader just because you see a bad day. Bad days will happen. In fact, bad weeks will happen. In fact, bad months and even bad years will happen. But that's where the psychology of investing is so important. That way you can actually find the opportunity when everybody's running away. One of the things I like to talk about is when you see downturns in the economy, just remember POOP. P-O-O-P. Panic leads to overselling, leads to opportunity, leads to profit. P-O-O-P. When people panic, people sell. That selling creates a good buying opportunity, and that buying opportunity can create the opportunity for profit, assuming that you're buying a good investment. Now remember, on January 7th, I'll be going over how do you actually research and find good investment opportunities, how do you come up with an investing strategy. So if you have not registered for that, I have a link for you down in the description. But the key is ultimately to remember your strategy and not panic. I know the internet makes it very easy to panic when things are happening, but when you see these crazy days, just take a deep breath. To be honest, the news that Jerome Powell gave is not that surprising. He's been saying this for a long time. He just put it in formal words during his press conference after the Federal Reserve Bank meeting, but we knew that he was going to cut interest rates by 0.25%. Wall Street said that there was essentially a 99% chance that that was going to happen. Jerome Powell has been hinting that he's probably going to cut interest rates less aggressively in 2025. He's not going to listen to what Trump says. He's been hinting at this. Even Trump was interviewed and asked about this, if he would try to remove Powell if he didn't follow Trump's lead. Trump said no. So none of this is really surprising, yet Wall Street took the news as a big shock. And then you start to see all these headlines about, oh my God, this is such news, groundbreaking news, when in reality, if you've been following the markets, this is really not that surprising at all. People just panic a little bit. But again, this is where, as a financially savvy investor, you want to be able to find the opportunities and stay calm. Staying calm is easier when you've been through a couple down cycles. But just remember, nothing can go straight up. We don't know what's going to happen in 2025. We could see a recession in 2025. We could see a recession in 2026. We could see a recession in 10 years. We don't know when the next recession will be. We don't know when the next market crash will be. We know it will happen eventually. But at the end of the day, your job is not to try to time or predict when it will happen, but rather find the opportunities when you see the downturns. Downturns are a part of our economy. They're a part of the economic system. But they also create more wealth because those create great buying opportunities for the investors that are calm, that are financially savvy, and that can find the opportunities. Remember, recessions create more millionaires than any other time because it's almost like Black Friday shopping, but for investments. So when you see these downturns, I don't want you to panic. I want you to stay calm, and I want you to find the opportunity and stick with your strategy. The mistake that so many people make is they go in with the mindset that I'm a long-term investor. I'm going to invest in these stocks as a long-term investor, and then you start to see a little bit of a downturn, and then people panic, they freak out, and they sell, and then later on they see the markets rally, and then they miss out on the big gains. You got to know your strategy, you got to know how to research, and you got to know how to actually be financially educated so you can take advantage of those opportunities. So again, we don't know what's going to happen in the future, but you want to be financially educated so you can capitalize on whatever will happen and find the opportunities no matter what happens. That's the way you win as an investor. Don't try to time the markets. Don't try to predict the markets. ABB, if you're a passive investor, always be buying and just find the way to win over the long term. And with that, I will see you on YouTube tomorrow.